If you're thinking about becoming a mortgage broker in the UK, this is probably the most Googled question that you've done more than any other. How do brokers actually get paid? And honestly, the answers online are all over the place. Half of them are trying to sell you a course, so they're telling you that you're going to be earning 300 grand by Christmas, and the other half are people who quit 8 months in, so they tell you that the career pays absolutely nothing, but neither is true. The real answer, it's specific, and once you see the maths properly, the whole career stops being just so mysterious. See, most new brokers, they don't understand their own income until it's way too late. They chase mortgage volume because that's the number they can see. They completely miss, though, the fact that the protection they're not selling is worth way more per case than the mortgage itself. They stay employed for 6 years, thinking self-employed brokers earn a little bit more, when actually the real gap is closer to 4 times. They set their broker fees at 300 quid because someone said that that was fair, but they never realize it's 12 grand a year on the table that they've left. The gap between a broker earning 40 grand and the broker earning 140 isn't case volume, it isn't luck, it isn't the market, it's specific understanding of how the income streams stack, which ones matter most, and where the actual leverage is. And this video is that maths laid out clearly, so when you plan a year, you're planning against real numbers rather than just your gut feeling. Now let's get the boring bit out of the way first. The proculation fee, which is also known as a proc fee or lender commission, whichever you want to call it, it's the money the lender pays you to your firm for placing the mortgage. In the UK, it's usually about 0.3 to 0.4% of the actual loan. So a 250 grand mortgage, that's around 750 to £1,000 on a 400 grand mortgage. That's going to be about 1,200 quid to 1,600 quid. And on a 600 grand mortgage, maybe 1,800 to 2,400. Buy to let, a little bit higher, sometimes about 0.5%. But here is what most videos don't tell you. That number is gross before your firm or your network takes their slice. If you're employed, you'll typically see anywhere between 10 to 30% of it landing in your pocket, on top of your basic salary, of course. If you're self-employed under a network, you're keeping 70 to 90% of that after the network's cut. Same case, wildly different take home. And that is the single fact why self-employed mortgage brokers earn so much more per case, because they're keeping the money the firm used to keep. The proc fee is genuinely the smallest income stream on a case done properly. If your whole career is built around chasing proc fees, you are running on this treadmill, and the real money is always downstream, and that's what we're going to talk about, how you can get it. Now, the next income stream is the one you actually control, and that is the broker fee. What do you charge the client for your advice? This one is all over the place, if I'm honest with you. Some brokers charge nothing and they rely purely on that proc fee alone, usually because they've got high volume estate agency leads, and some charge, say, £299, some charge £395. Established self-employed brokers, they routinely charge anywhere from £595 to £995, and specialist brokers dealing with those complex cases can charge £1,500 or plus. Now here's where the beginners quietly kneecap themselves. They undercharge because they don't feel they're worth the fee yet. They price low, they apologize for it when they say it out loud, and it costs them 10 to 12 grand a year in avoided income. But the truth is, clients almost never push back on the fee itself. What they push back on is the apology. A confident broker charging $595 gets fewer objections than a nervous broker charging $295. The number isn't the problem. The delivery is the problem. And if you're going self-employed, the price your broker fee at the top of what your market comfortably supports, and get comfortable saying the number without hedging. That one habit is worth way more than any of those CMAP modules you do. Now the important one. 2 brokers doing identical case volume can end up with completely different incomes. And this is where the split happens. This math on the typical case is worth burning into your head. 250 grand mortgage will pay you a proc fee of, say, £750 to £1,000. The protection, though, on that same case, done properly across income protection, family income benefit, critical illness policy, life cover, pays a commission somewhere between £800 to £2,000. That's modest, all right? If you get really good, it can be higher than that. Same client, same conversation, same cases, but protection matches or beats the mortgage income every single time. Multiply that across a year, and a broker doing 40 cases with strong protection attachments pulls in 60 to 80 grand of protection commissions on top of the mortgage income. Same broker doing the same 40 cases, but avoiding protection, they leave that entire number on the table. Nothing about their skill or their firm is different. They just didn't master that one thing. This is why I am so heavy on protection sequencing. It's not just moral, it's commercial. The broker who introduces protection at discovery, researches it alongside the actual mortgage and closes it at submission is running a business worth roughly double than the broker who bolts it on as an after completion afterthought. Same clients, same lender panel, completely different annual income. If you take one lesson away from this whole video, please make it this one. Master protection early. It's the biggest single lever on your income for the rest of your career. Buildings and contents. Most beginners either ignore it or they treat it as an afterthought, which is a genuine mistake because general insurance is one of the only income streams in a broker's business that compounds. The commission per case is not huge at all. It's usually say 50 to 150 quid, but it stacks 100 policies on the books, and renewing every single year becomes a background income of 5 to 15 grand a year that lands whether or not you sold a single new mortgage that month. A broker with a 5-year back catalogue of general insurance quietly covers their standing costs before they've done any single work. It's small, it's boring, and it's the one reason the career compounds so hard once you've been in it a few years. Now the one that actually matters for the long game, remortgages. Every mortgage you write today comes back as a remortgage in 2 to 5 years' time. The broker who understands that from day one plays a completely different career from the ones who are purely chasing new purchase business. A remortgage pays roughly the same proc fee, and if it's a new lender, roughly the same broker fee as a new purchase, but it takes a fraction of the effort. The client already knows you, half the documents are already in your CRM, you're not selling, you're servicing. Think about what that means over time. A broker writing 40 new cases in year 1 has 40 potential remortgages coming back in year 3. A broker in year 5 has hundreds of clients rolling through remortgage windows at any given time. That's the compounding effect, and it's why the income curve in brokering is just so backloaded. Year 1 is the investment year, year 3 is when the remortgage cycle really starts firing, and year 5 is when the back catalogue is paying you serious money for work you did years ago. This is why so many new brokers quit exactly at the wrong moment. They see the year 1 income, they decide the career doesn't pay, and they walk away right before the compounding is ever actually going to kick in. Now let's do the math on a specific £300,000 mortgage so that you can see how these streams stack up. So proc fee of say 0.35% is around £1,050 paid by the lender. Now, if you're self-employed on a 90-10 split, which is pretty good, to be fair, it's bloody great, that's around £945 to you. If you're employed on a 20% of that proc fee, it's about $210 on top of your basic salary. Same cases, wildly different take home. Broker fee, if you charge $595, self-employed, keeps most of it. Employed, usually you don't see the broker fee at all. The firm keeps it. Then the protection, which is indemnified commission of say $800 to $2,000 is realistic. Employed brokers see a percentage of that as commission, but self-employed brokers keep the bulk of that. And a self-employed broker looking at say $2,000 to $4,000 of a total case value, an employed broker on the same might see £400 to £800 in their pay packet on top of their basic. Same client, same case, same conversions, but that gap is the entire game. Now, a self-employed broker running a business properly, protection sold well, general insurance done well, remortgages captured, can build a genuinely comfortable 6-figure income of around 4 completed cases a month. Roughly 1 a week, but once that remortgage book kicks in, that number drops further. But compare that to what most beginners assume, that they need to smash out like 15 to 20 cases a month to make any real money. They won't. Actually, the brokers doing that kind of volume are almost always the ones who haven't built any protection or retention properly, so they've just got no depth. Then they have to run on volume to compensate. Volume without depth is a treadmill. Depth without volume is a business. The 4 cases a month broker with strong protection, general insurance and retention will almost always out-earn and outlive the 20 cases a month broker running on proc fees alone. Now, on the same case, an employed broker is typically going to see between 10 to 20% of what the self-employed broker is going to see. That's the trade. The employed broker gets the leads handed to them, a salary paid, whether or not they wrote the case that week, compliance handled, structure imposed from outside, but the self-employed broker keeps the money but builds the lead flow, manages the compliance themselves, and runs their own business. Which one is right depends on where you are, what your savings look like, and whether you've built the discipline to run yourself without needing a manager. But the income maths is not even close. If you can survive that 18-month build-up window on the self-employed side, the take-home is dramatically, honestly, it's crazy higher. If you can't yet, though, employed is the right call until you can. That's what I had to do. Now, can brokers actually earn six figures? Yes, they can once the career is built properly. Established self-employed brokers with strong protection, general insurance, running in the background, and a maturing remortgage book can comfortably sit in those six figures. Top performers will earn multiple six figures, and very top of the market, brokers with small teams doing specialism stuff and exceptional lead systems, they can earn genuinely serious money. I've got a few of them as my clients. Employed brokers can also reach six figures, but it's much harder and it's capped by the firm's commission structure. The firm's going to keep most of the case value to pay for the leads, for the office, for the compliance, for the support, which is a fair trade, by the way, for a lot of people, especially early on. It becomes far less fair the more experience you get, which is why so many experienced brokers eventually inevitably move to that self-employed model. Six figures is generally achievable in his career. It's not guaranteed. It's not automatic. It doesn't happen in year one, but for a broker who understands the income streams, sequencing protection properly, building that remortgage book from day one and runs the business with discipline, six figures is a very realistic year 3 or year 4 number. Multiple six figures is a year 5 to year 7 number, and the compounding never really stops. Now, if you're starting to realize how much of a real broker income sits underneath the surface, so protection, retention, remortgages, the long game, the next question is whether you've got the mental capacity to actually build that career, because none of those numbers compound if you're not here in year 3. And most people who quit, they quit for mental reasons dressed up as a financial one. And that's what the next video is on. The mindset of successful mortgage brokers, all how they do it, the rejection, income volatility, slow months, failed deals, and the long grind of year 1 from an honest side, not the Instagram version. Watch that one next. Hit subscribe as well while you're there.